Now see this illustration. Boxer purchased a non-current asset on 1st January 2011. The cost on that date was $30,000 and the useful life was 10 years. Boxer does not revaluate this type of asset but account for the impairment. And what is the depreciation is 10 years, so the depreciation will be 3,000 per year, of course. But at 31st December 2012, the asset was subject to an impairment review and had a recoverable amount is 16,000. So value of asset is decreased. So purchased price is $30,000 and on 1st January 2011, and the reduced value is on 31st December 2002, means after 2 years, 31st December 2011, 31st December 2012. So after 2 years, so we have to charge the depreciation here also. So depreciation will be, first calculate yearly depreciation. 30,000 divided by 10 is equal to 3,000. So for 2 years, multiply by 2, 6,000 is the depreciation. So less 6,000, the value was 24,000, and the impairment law revaluation, by revaluation the value of asset is 16,000, so impairment loss is 8,000 is the impairment loss on that date, means 8,000 is transferred in profit and loss statement. Now what happened after that? After again 2002, 2003, 2004, 2005, means after 3 years, the condition due to which the organization has to calculate the impairment loss was reversed, and now the value of asset is 40,000. The new value of asset is 40,000. So value 16,000 was the value on this date. After 3 years, so 16, after 3 years it happened 16,000. What is the life of this asset? Here the life of asset is 8 years, because original life is 10 years. Now when after 2 years the value is reduced, but at that date the life of asset was 8 years. So we have to calculate 16,000 divided by 8, 2,000 per year, and after 3 years the appreciation in asset is after 3 years, so we have to calculate the value of depreciation for 3 years, 6,000. So on that date when the value increase, the value of asset is 16,000 less 6,000 means 10,000. So these are some information that I am calculating. Now see what is required. Explain with supporting computation the impact on the financial statement of the two impairment reviews. So first year ended 31st December 2012. Now we are calculating asset cost on 1st January, that I already told, 30,000, and the depreciation is 6,000. So the value of the asset was 24,000. The revaluation took place on this date and the value of asset is reassessed 16,000. So the loss is 8,000, that is transferred to the profit and loss statement. That is in fact impairment loss. Now The asset is written down $16,000 and the impairment loss is $8,000. Is the charge of profit and loss account, that is transferred to profit and loss account. The depreciation charge per annum in future period will be 2,000, that I already told, calculated, means 16,000 divided by 1/8, because this is the remaining life on that date. Now come to the year end 2015. The carrying amount is 10,000. Of course, because the value of depreciation is 6,000 for 3 years. So 16,000 minus 6,000 is 10,000. 16,000 minus 6,000 is 10,000. Recoverable amount is 40,000. Recoverable amount is 40,000. That means this year there is no impairment loss, but we have profit of 30,000. How much? The question is now how much you will transfer in the statement of profit and loss. How much you will transfer in the statement of profit and loss. Now you have to calculate from 1st January to 1st January 2011 to 31st December 2015. The original value less depreciation. There has been no impairment loss. In fact, there has been a complete reversal of the first impairment loss. The asset can be reinstated to its depreciated historical cost, i.e. to the carrying amount on 31st December 2015 if there never had been earlier impairment. We have to calculate that amount, means 30,000, and on 31st December 2005 what will be the value of depreciation? 5/10. So 30,000, if there would not be any impairment loss, then the value of the asset was 30,000. Per year life was 10,000, 10 year, so the value of depreciation per year was 3,000. For 5 year, what will be the value? 3,000 multiplied by 5 means 15,000 is the value of depreciation. So 30,000 minus 15,000, this is the value, historical cost value on the date of appreciation, 15,000. And what is the impaired value? At that date, impaired value was 10,000. So reversal is possible up to 15,000. Above that we cannot reverse. So total appreciation is 30,000. So 40,000 is the current value. The carrying value on the date is 10,000. So total increment in the value is 30,000. But we can transfer 5,000 only in profit and loss. Remaining will be other comprehensive income.